All right, so recording is started. Did you guys still have the sound okay? Is it sluggish or anything? Let me share the screen as well just to replicate the exact setup. Test. Is the sound okay? Okay from my side. All right, so perfect. Let's start this way. I think OBS Studio is more stable and should be a better option. But yeah, I'll just have to figure out. So the webcam insert is there for the recording, but I'm not able to run it on this Discord kind of view. So I'll I'll try to find a solution for that. All right, so let's start this session. The screen is shared. So let's look at the market. And yeah, so today is FOMC. So we have the interest rate decision at 2 this afternoon. And we also have the kind of FOMC Q&A, so press conference with Q&A at 2:30. So that should bring a lot of volatility. Rate cut is expected according to probabilities. I think we're at like 96% probabilities right now. So I think it's pretty much baked in. So let's see how the market reacts to that rate cut, and especially what kind of the Jerome Powell's stance and discussion and clues that it might give and how the market reacts to that, right? So perfect. So let's look at the market, knowing that I think that it's important to go into today with the proper mindset. And I shared something in the journal a bit earlier, is just go into that kind of day expecting both scenarios. The market is still in an uptrend, but we do have kind of that breadth divergence going on. So there's a lot of indecisions. And you should base your plan on your own time frame, on the cushion that you had in the last few days and weeks, and even on the year. Is your yearly performance allowing you to be a bit more aggressive in testing that FOMC? If yes, great. If not, then think risk first and just protect your capital, and you'll see how the market react to FOMC before putting back some risk. So that's where we are. I'm just going into today with very good cushion. I have around 13% cushion on the current position. I'm green on my secured profits as well. So it means that even if I'm stopped out against the weekly structure on most of my positions, I'm still making money on that market cycle. So for me, it relieves a lot of stress, it relieves a lot of pressure, knowing that I will be making money no matter what happens. That I think is the proper mindset to have into today. All right, so price action, like I said, QQQE is kind of a pivotal area. So we had that nice rally again since April. The market went sideways, consolidated, stayed in that range. And in the last week or so, we had that 21 DMA daily structure reclaim. And right now, I'm still seeing that action as being pretty constructive into FOMC. We're having that 3 days tight just above the now rising daily structure. and we're kind of retesting those highs, just tidying up before maybe a breakout or a rejection. But as long as we stay above a rising daily structure, I have to be engaged in the market and have that bullish mindset. Unless we have bad feedback, we start to lose positions and overall traction is not there anymore. When I see the market above all moving averages, that's the mindset I need to have. Like we discussed, breadth is pretty poor. There's two sides to see this. Either that it's a negative divergence and the market is kind of slowly breaking down under the surface and the indices will catch up. But personally, what I see is kind of a stealth consolidation, digestion of the April rally, and we now have a lot of room to the upside. In fact, we do have more room to the upside that we have room to the downside right now, just because the way we kind of went in a downtrend, so breadth contracting for now a few weeks. So ultimate confirmation that we have a good market will come from a hookup and a new uptrend on the McClellan summation. And until then, the market remains at risk, especially if price cannot confirm that uptrend above the daily structure. Like I said, I think it was yesterday, I'm still seeing an improvement in high lows in the McClellan oscillator. So for me, that kind of positive divergence on the lower time frame, along price above the daily structure with tight backtest action, is what I'm playing. That's my mindset. That's my setup that I'm playing right now. All right, so let's look at internals first. So credit spreads pretty much in a daily and weekly downtrend. So once again, when we're below a daily structure, I don't stress about it. Market is LT and pretty much risk on. VIX reclaimed the daily structure into FOMC while the market was going up and sideways. So I'm still not sure what's going on. Either that there's risk creeping in that might indicate some pullback into FOMC, or it was some kind of edging going into the event, and we'll see kind of VIX taper out in the next few days. So something to look for, especially after FOMC and on the Q&A session when Jerome Powell speaks. Do we see a spike in the VIX right here, or we see some rollover and rejection of the daily structure retest? That will give some good clues about this market as well. And finally, Bitcoin. So Bitcoin, I really like still that setup. We discussed that yesterday, but now it kind of confirmed it. So we had that daily structure, reclaim, backtest, and that reversal pivot here at 116K was the daily reversal that we reclaimed yesterday. So basically confirming the continuation breakout from here. Right now we are retesting that pivot. That's very normal and LT action to backtest pivots, to backtest structures. But yeah, if we cannot kind of hold that pivot and all that range right here on the right side above moving averages, then it will be suspicious. But until we fail, you have to assume that we have confirmation, and that continuation setup is confirming out. All right, NASDAQ. So yeah, we discussed that yesterday. We're still breaking out from that multi-week base. So on QQQE, we have the same type of structure with a breakout attempt, backtest, low volume, right into that range structure. And yeah, the broader market, NASDAQ 100 was weaker than NASDAQ 100 itself. So QQQE versus QQQ. But yeah, we're seeing the same type of action, just a bit stronger. We have that big multi-week base with higher lows, that breakout, and now kind of that slow pullback to retest this structure. Will we have a full shakeout into structure today on the FOMC? That's possible. But that's also possible that we get out of that flag and just continue higher. That weekly chart, once again, is what I'm playing. Big base breakout, multi-week and month base breakout, and then we have that sideways consolidation as a continuation pattern, and we're breaking out into new highs. So yeah, that's what I'm playing. All right, so let's look at the portfolio. So Rocket Lab, it with an offering yesterday, down 12%. That was pretty nasty. But like I explained in the journal, what I'm playing is basically the confluence of that reversal pivot, that 21 DMA and daily structure retest. And also on the weekly, we're seeing kind of the same setup with the weekly reversal pivot, the 10-week moving average, and the weekly structure retest as well. So nice confluence there. I'm ready to take that risk against that confluence area, and we'll see how we close the week and how we can handle FOMC from here. But I like that low risk spot to add to my position. GEV, pretty normal backtest into the 21 DMA structure. We're setting up that 21 DMA structure reclaim, backtest setup, and let's see if we roll over and fail that setup, or we confirm that continuation pattern with a breakout to the upside. But I'm still in my position. It was not de-risked, so I'm playing it against the daily structure here. And if we lose that daily structure, then I will be out of that trade. Bitcoin, we discussed that. Hood, very good action. So again, yesterday the setup was that base breakout and retest setup with a higher low structure. And we did confirm the daily reversal yesterday above 116.53. So for me, kind of the continuation pattern is confirmed. And yeah, that's the trade right here. Weekly, we have potentially a breakout attempt and base structure retest, same thing as we see in the daily. But yeah, we're still trending nicely above the weekly structure. And that's the setup right here. Palantir, still expecting maybe some kind of retest and backtest. So we have that 21 DMA structure reclaim. Maybe that was the retest right here. But otherwise we're getting very tight on the right side, so either that we retest that structure, that now rising structure on the right side to complete the setup, or we just go. But yeah, that's still acting great, especially on the weekly. We have that weekly reversal setup and reclaim of the entire weekly structure. So based on the weekly and that close on Friday, I'm still pretty positive and bullish on that setup right now. But let's see how we close the week. Auber seems to fuck around once again. So what was the news? So yeah, I don't know. You guys tell me. There seems to have some news on Auber this morning. We'll see how it reacts today. Again, Auber is not de-risked, so I'm playing this against the daily structure. As long as we stay above that kind of structure right here, and we close above, I will remain in that trade. I still looked and love that weekly chart, so it was looking good with that base on base setup. Weekly breakout, but now it Lyft and Waymo launch partnership to expand autonomous mobility to Nashville. That's the news. Thanks Bain. So yeah, let's see how it reacts to that news today. I'm still in that trade as long as we keep inside the daily structure, as I explained. CCL, that trade is direct, so I'm playing this against the weekly structure. Still acting good, still in that base on base setup as well, right above the 10-week moving average. So nothing to do there. Same thing for Micron. So 2R target is it. Now it's de-risk. Just trailing the weekly structure here on that trade. Let's see how it goes. Tesla, same thing, pretty extended, but it's de-risks. So trailing the weekly structure. Same thing for Warner and Oklo as well, trailing the weekly structure for the larger move. Yeah, focus list now. Focus list, we have Carvana on the daily reversal above 367.08. So getting very tight with 2 inside days. Right at the 21 DMA. We have that tightening on the weekly as well. So let's see which side it breaks out on FOMC today. MP. So MP still consolidating in the weekly structure. We tried to reclaim the 21 DMA structure yesterday, but failed at prior day's high. So that becomes your reversal pivot. So 21 DMA here is a good spot to initiate. Above 67.34, you get your daily reversal confirmation and also your structure reclaim. So that's a good spot to look for initiating MP. And VRT still a stock of interest for me. We are still trading that kind of 21 DMA and kind of wedge breakout setup right here. And look for a potential weakness as we retest the now rising daily structure. That would set up the stock even better to have that back test following the initial reclaim. And yeah, that's it for me. Did I have other things in the focus list? VRT, MP, yeah, UD. So you can still look at UD for a retest of that reversal pivot, right? That would be a nice way to get in. GEV was the other name in the focus list. So you can look at yesterday's high pivot for a daily reversal, or simply kind of a daily structure reclaim to confirm the setup here. And CVNA, which we discussed. All right. Any questions, guys? And yeah, the game plan for me today, I shared this in my situational awareness post last night, but basically, I'm just going into FOMC with the exposure that I have, with the cushion that I have, just not expecting anything, but following my system, following my positions. Let's see if they can hold their daily structures and weekly structures today. And yeah, just going in the event with an open mind. What do I think about Ooster? Yeah, it's looking good. We have kind of that reversal pivot and kind of shakeout action of the lows. We have that 21 DMA reclaim-ish with backtest. So yeah, I would look at yesterday's high pivot for a daily reversal and confirmation of the setup. It's also looking good on the weekly. So yeah, there's good confluence. That's a pretty high ATR name, so just adjust your position accordingly. But yeah, it's looking good. Snow, kind of dead for me. I had it in the focus list yesterday, but I really wanted to see it all that 21 DMA recent peg low pivot. And that would have created kind of a higher low structure that I would have liked to keep that name in focus. But yeah, that weakness, either that we kind of just shake out and came back in and it will come back into focus. But if we follow through down here and we start to live below the daily structure, then that might tell that it need more time to just digest and build, maybe retest and fill the gap. I don't know, but it's acting weak, and I think there's better stuff right now. SMCI, oh my god, that's an old friend. So if you just look at the daily, there's definitely some overhead resistance, right? We have a big gap. On a micro level, you have kind of your daily structure breakout and retest setup right here. So you can look at some daily reversal to play this thing. But what's kind of putting me off SMCI, and that's usually how it moves, right? It just tend to chop around for forever and then just go off and trap everyone. So there's, yeah, I don't know, that wouldn't be my focus. I would kind of get interested if we start to live kind of in that area right here. So let's see if it can reclaim the weekly structure, and it's declining right now, and kind of start to build a tight right side right here. That could mean to build some kind of larger stage 1 breakout type of setup. But yeah, otherwise, I'm just saying that huge chop and overhead resistance on the left side. So personally, not interested. I think there's better stuff out there. No other questions, guys? Nvidia, nope, all good for now. Nvidia, oh, that's a nice gap down. So yeah, yesterday I was looking at that daily reversal to kind of confirm that tight flag-ish setup, but the fact that it was weak and kind of close to a new low, I think it need more time to build. Maybe build that right side, create that kind of higher low and inverse head and shoulders type of setup right here. But yeah, otherwise we need confirmation. It's kind of weak right now, and I would not engage here. I think it need more confirmation on the right side. So True Anomaly is asking, how long have you been trading this system? I'm new here. Yeah, I can go on with my story, but about this specific system, I'm always evolving and always improving. I started trading around 2014. I traded futures, forex, without big success. To be honest, I was at university. I was studying to become an engineer, and it was kind of part-time, not that serious at that time. 2018, I started to be way more serious about it. Started to be more in the CanSlim type of system, and evolve as a more swing trader around 2020, and then from there stop trading kind of the breakout setups in 2022 with the bear market. 2023 started to introduce more of those pullback setups, and yes, pretty much trading the way I am, but with some twists since 2023. And before that, like I said, it was more short-term swing trading and along some CanSlim type of position trading. Yeah, man, Powell will definitely shake the market. That's for sure. But we'll be ready. Missed the market portion of this. Are we expecting some pullback? Yeah, man, I don't know. I'll let you, I'll post the recording pretty soon, just after we close the session, and I'll let you watch the recording. But yeah, basically I'm just going with an open mind. The market is above all moving averages. We have traction. Feedback is good in the last few days. So yeah, not a spot to be bearish when we trend above all moving averages. Think about Christian Kolomagi quotes. Once you start to be or try to sound smarter than the 10 and 20, that's when you set up yourself for mediocrity. Just follow price action, man. Price is above all moving averages. We're trending nicely. We're just breaking out of a huge base. The weekly is out of a multi-week base. I mean, yeah, we can pull back. We can always pull back. You have news like Auber every day, and that's part of the game. Sometimes you're in a gap up, sometimes you're in a WBD, and the other day that's a gap down like Auber. That's just part of the game. That's part of the edge. And if you start to anticipate a pullback, every time the Nasdaq is red above all moving averages, like in the last 2 days, how do you plan to hold for larger moves? If you trade to hold stuff for weeks and months and start to puke and anticipate a pullback every time the market is red, how are you supposed to hold your winners? It just doesn't make any sense. So trust the trend, and as long as you have cushion and as long as you have traction, just trust your stops and don't try to anticipate anything. And that's where I'm at. I built exposure. I built cushion. I have around 13% cushion in my portfolio right now. And that's what I'm ready to play. If we pull back today, if we shake out, if we start a new pullback or even a correction, so be it. I will make money on that market cycle because my secured profits are larger than my risk. So I'm making money anyway. And that's the right mindset to get into a trend. Just build your cushion, accept that risk, raise your stop, trim into strength, build that that mental resilience to just accept the fact that you don't know where the market is going, but we're in an uptrend. Pleasure, guys. I know we ramble a lot about that, but I really think that that's one of the hardest thing to do for a new trader, and even for some experienced traders, is being patient and just removing any ego and any kind of anticipation reflexes and muscle memory, and just kind of going for the market and stock setups, and just turning off your brain after that and following that trend. And that's hard because we used to be paid for having an opinion, being paid for doing analysis and all that, but in the stock market, that's kind of detrimental. If you're a swing or position trader, yeah, you can be a macro trader and sound good on Twitter and on X, but I just found out that most of the time, and trust me, guys, I've been there. I used to try to anticipate every pullback. Every time Brett was looking down, every time the market was red, and my position had kind of downside reversal, I was going all cash. I was going short, and then the market just got into support and everything sprung back up, and I was left with no position, no exposure, with a market making a new high. Sometimes you just get it right, and the market proves you right because it goes into a pullback. But usually the market goes with the trend, and over time it just pay more to just follow that trend. And that's why what I'm trying to educate and learn to new traders in that community. Yeah, it's horrible when you zig and the market zags. Yeah, very true. All right, so last questions, and then we'll close the session. So, you think that the question is, so you think that waiting for the pullback after breakouts has had a better probability of success? I'm trying to learn, been studying breakouts, but it seems like pullback would have worked better the last 2 months or so. Yeah, it's not just the last 2 months or so. It's really kind of the last 2 years or so. And yeah, it has to make sense with you, your mindset, your expectations, the time frame that you trade as well. But what we've seen in the last few years is typically breakouts are faded, are sold into as liquidity events, and you usually have way better win rate when either you're able to position on anticipation of the breakout, or trying to get the first pullback and the first back test following the breakout. That's the area that personally I try to engage. It does offer the best risk reward, and better win rate as well. And I'm not here to say that my strategy, my system is the best and is perfect. I'm making that point very often in my Git book as well. That's my system. That's how I trade. That's what I found fits me best. But maybe it's not for you. Maybe it's not for everyone. And maybe there's a better system. But the system that I developed is made for me. That's how I love to trade. It does give me good performance, good results, and it fits my mindset. It fits the time frame that I want to trade and the lifestyle that I want to enjoy outside trading as well. So everyone has their own kind of preference, but those are mine. That's my pleasure. So, all right, guys, we'll stop the session there. Good luck today. And once again, go into today expecting nothing. That's the best advice that I can give you. Keep an open mind. Be optimistic because the market is in an uptrend. We had good traction. And we're still having that continuation set up on the larger time frame after the April's rally, right? So we had that April rally, Brett contracting for basically the last few weeks and months after that April rally, and then we went sideways and having that breakout. So we have a big left side consolidation with Brett contracting, and then that breakout on the right side, and we have good traction in the portfolio, more importantly. So I'm still going in with being optimistic, but if the market decide other way, and if the market kind of reacts to the rates cut and Powell's comments differently, then we'll adjust. As simple as that. We'll go 100 degree, and if needed, we'll take our stops. We'll reduce exposure, reduce our risk, nail more profits into strength or weakness in that case, and just be more defensive. But we need that information instead of anticipating sorry, anticipating that possible scenario. All right, so enough for me. Have a good day, everyone. Have a good FOMC, and as always, I will be in the pit if you have questions. So take care, and bye-bye, everyone.